Recently, I blew 4 of my live trading accounts and a few more are going that way with huge floating losses. So what's going on? Is the market going crazy? Did my team and I do something wrong? Or is this a normal phase we have to go through on our algo trading journey? As always, I'll show you what happened fully transparently, but stay with me because I will share the lessons I've learned. FX stabilizer dollar cat. If I show it to you in the space tracker, you will see that initially we were trading in a $1,000 live account and then we've requested a withdrawal. Then we added another 2,000 and the total balance was above 3K and we've made a withdrawal once it made 20%. And then in May it started going in a floating loss and the account was blown. It's because of this dollar cat move that started at the beginning of May, and this is where the FX stabilizer started selling and it kept selling, and you can see what an uptrend we had from the dollar cat, but the AI kept selling until that moment and all of those losing trades were closed right on the top of the move, and now we have this kind of triple or even quadruple top, and if the price breaks through these bottoms it's very likely that we will see a pullback, but the trades closed on a loss. It is what it is. Now we've made a withdrawal of $800, so it's not a 3K that we lost, but it's more about 2K. Still a huge loss for me. So when we looked at it with the team, we figured out that the worst drawdown with the dollar cat was about $900 when trading 0.01 initially, but we didn't stop it when the drawdown went below $900. Maybe we should have stopped it at 1.5 times the worst drawdown, let's say at $1,300 or $1,400. So we can say, okay, the equity went way below the worst drawdown. It's time to close it. Obviously, there is a huge trend that we haven't seen historically for this strategy, and we should have closed the account, but we didn't. We left it to recover, and you can see right on the top of the move, the trades were closed. So the lesson we are adding to our procedures is once we see a drawdown bigger than what we've seen historically from the backtest, and we give it a little bit of a buffer, if it goes to 1.5, the worst drawdown, we should close the trades and save the rest of the account. The second account is Market Master Dollar Cat. Yeah, it's been a bad week for the Dollar Cat. Actually, it's a fantastic uptrend for the Dollar Cat, but this is what kills the grid martingale EAs. So the Market Master was trading since November last year, very steadily going upwards with some small drawdowns until recently, again from the beginning of May, you can see that it started selling. I will go to the close trades. Yep, it started selling and it uses a grid martingale, so it rapidly increased the lots and the account was blown. Now blowing this live account we consider to be our internal mistake because we were comfortable to trade it with 0.01, and it seems that along the way we have increased 3 times the risk to 0.03, and I can't say for sure, but probably we've done that because the monthly return was very low with the Market Master with Dollar Cat and we didn't have huge drawdown. So we said at one point, okay, let's increase that a little bit to reach 2% a month. But when we backtested it again, we saw that that's a huge risk for a $1,000 live account. So the second lesson I would add over here is that we should stick to the initially predefined lot size and risk we're taking, no matter if the EA will make 0.5% or not. And the vendor Andreas that I invited for a podcast in my studio actually wasn't recommended the Dollar Cat. I checked the emails and I asked him last year, I said, okay, the euro dollar is very profitable on the Market Master, and if it's a sustainable, robust strategy, should be profitable with a few more pairs, right? And he sent me this set file for the Dollar Cat, but he said, I don't suggest to trade it. It's better on euro dollar. So yeah, 2 mistakes of ours. We wanted to put it on a pair where we are not getting the desired 2% with reasonable risk. And then number two is we increased the lot along the way just to gain more percentage per month, which obviously is a mistake. But that's the reason why all of our live accounts are public on the website. So you guys can see which ones are making above 10% and which ones fail to make even 1%, or which ones are in a loss. And that's the idea of the algo trading space from the very beginning. That was my idea when I started YouTubing my trading. So if you want to support me so we can test with my team more and more EAs, please double check if you have subscribed. That means a lot to us. It gives us the energy, the capital, the resources, everything we need to keep trading and testing more and more EAs on live environments, so you guys can pick at the end the right EA on the right broker on the right asset. The third expert advisor that blew the account is the Sentinel Ai. We were very enthusiastic about this expert advisor when it was launched, but right after we started trading in live, it went in a big drawdown and the account was blown. The trusted vendor Value Trading launched this EA with a very promising track record starting from 2019, and it was making steadily 2% a month. And the backtest was confirming it. So we had a verified track record, we had a backtest, and we missed the demo trading just on this account. We test everything on demo, but with this one, because of this verified track record, we said, okay, let's go for live straight away. A huge mistake. And that's where the third lesson comes. We should never ever skip the demo testing, no matter the vendor, no matter the track record. And we lost just $1,000 live account, but it seems the vendor is about to lose way more because the account is in a very big floating loss at the moment. The drawdown is about 75%. Of course, I hope they don't lose the account because it's a lot of money, but I'll leave it on you and let me know down in the comments, what do you think happened with this Sentinel EA? What went wrong? And if you're not sure about the answer, I'll pin a comment with the link of another YouTube video where Ilan from the team reviewed it and laid out all possible options for this bad outcome of this promising EA. And the fourth account is Dark Venus on Eurodollar. We've made a withdrawal from that account and then it hit the 50% protection. This is where we had about $300 worth drawdown on the backtest, I remember, so we kept that 50% because if it goes more than 300 with a little bit of a buffer, obviously something is wrong, whether the strategy or the set file was over optimized or just the market made this unusual move or unseen historically move that the expert advisor can handle, and we better cut off the losses and we withdraw the money from the account and we will use it for something else. And guys, I'm not frustrated from this. The total loss in this case was 2,000 plus 1,000, 1,000, 4,000 and 500, so $4,500 of a loss. Yes, it's a lot of money, but I'm not frustrated because for me, this is a business cost. I always take it as the cost I pay for my trading. That's the cost I have to pay ongoingly in order to keep finding the good and robust strategies. It's just impossible, no matter what we do with the team, that we will keep adding to our portfolio only profitable and profitable and profitable EAs that will never blow. That's just impossible, no matter what we do. And if you're not feeling comfortable to lose accounts in your trading, no matter algo trading, no matter manual trading, if you're not happy losing live capital, you can start with a funded program. For example, DarwinX. They have live trading with darwinx.com, which is the licensed broker where you can fund an account. You can also follow experienced traders here, but with darwinx0.com, what you can do is you can get a 100K virtual account with real life trading conditions, real trading environment, which is very important, and that one costs 45 euro a month. This is where you can keep practicing. This is where you can keep testing new expert advisors until you're comfortable trading live money. And if you do well, actually on this 100k, you can receive allocation. And you can see that in one of my accounts that I've been trading since October last year, I have been profitable for most of the time. There was some drawdowns, but now I'm trading one of my premium portfolios in here and I have the allocation. And if I just go to allocations, you will see that from this allocation, I am expected to receive 271 euro just at the beginning of next month, which is actually tomorrow. Today is the 30th of June. Tomorrow is 1st of July. So I'm expecting this 271 euro, and I've actually paid less than $1,000 for this account because it's 45 per month. But the good thing with Darwin X0 is that you cannot blow the account. Even if you have a huge drawdown in your account and you switch to a different strategy or a different DA, after you recover this loss, you will start earning these allocations and get 15% from the real profits. It's like having your own hedge fund, so it's very suitable if you're not comfortable blowing live accounts. So the lessons we've learned from these blown accounts are crucially important for us. But that's not all. We will also improve our process of onboarding new EAs into our live portfolio. Number one is we will perform longer back tests since 2017 or 2018, so we have about 10 years of back tests. We will perform Monte Carlo. This is where we will try to break the strategy on the back test. We will change, for example, the grid distance or the multiplier, and if a small change crashes the back test, then obviously the current parameters are over optimized. We will perform multi-market tests because every robust strategy should be profitable at least on 2 or 3 currency pairs. If it is just one, very likely that it's over optimized. And number 4, we will try removing the grid if possible in the EAs to see if the core strategy is actually a profitable strategy, because most EAs with grid and martingales do not have the edge. They will just depend on the grid to recover, and those are the EAs that usually fail over time because they use too much grid. Because there is a rule in algo trading: the more we use the grid, the weaker the initial strategy is, right? So all of these market EAs that we are reviewing and trading, we'll just try to see if they are profitable without the grid. This is something very important, but it just takes so much time. After every demo test, we will just dive deeper into each individual strategy. It's not just about passing from demo, passing the back test, because especially nowadays with AI, everybody can easily build a grid strategy, a martingale strategy, and we'll be flooded with this. You will be flooded with this from MQL, from vendors, from YouTube, because it's just easy to build them, right? It's easy to build a grid martingale strategy that shows profitable backtest, and it's very likely that it will pass the demo trading for 1 month or 3 or 6 months. And I said to some of the team this morning, it doesn't matter how long we test it on a demo account. If it's over optimized strategy, it can go well on 6 months demo trading and then it will fail, or it can go 5 days on demo and then it will fail. It doesn't really matter. So we really need to investigate the strategy deeper before we decide to put it on live trading. It's a lot of work, guys, but with your support on the other side of the camera, we can do everything together. So thank you very much for that. Thank you for supporting me. I'll keep being transparent, no matter if the vendors will like it or not. This is what we do. We are traders and we're YouTubing our trading. So thank you guys on the other side of the camera. As always, trade safe. Don't forget, I love you guys, and I'll see you in the next video. Bye.